Well, the European Central Bank cutting interest rates today after holding at record highs of 4% for about 9 months. To break it all down, what the ECB decision means for the Fed, Yahoo Finance's very own Jennifer Schonberger is here with the latest. Jen.
Good morning, Shauna. The European Central Bank cut rates for the first time in 5 years, lowering its key deposit rate by a quarter percentage point to 3.75% from a record high of 4%. The move marks the first major central bank to cut rates since a surge in inflation following the pandemic kicked off a global rate hiking cycle. The ECB cut rates as the U.S. looks to hold rates higher for longer, with the U.S. Fed set to hold rates steady at next week's policy meeting, a divergence in policy that could weaken the euro. That could make imports more expensive for the euro bloc, boosting inflation, one reason that ECB policymakers could be wary of diverging too much from the Fed. While the ECB's move today was widely telegraphed, more uncertain is how many more cuts will follow. The ECB raised its inflation forecast for this year and next and said in a statement, quote, "Despite the progress over recent quarters, domestic price pressures remain strong as wage growth is elevated and inflation is likely to stay above target well into next year." Now, despite encouraging signs last year on inflation, a recent pickup in wage growth has raised questions over how fast the ECB may be able to lower rates. Also, growth, which has been lower than in the U.S., showed signs of resurgence in the first quarter. Guys, in an ongoing press conference right now, ECB President Christine Lagarde saying that the ECB is not pre-committing to any policy path. Guys.
All right, Jennifer, thanks so much. Appreciate it. And we have much more on the ECB decision coming up on our show Catalysts. We're speaking to Jean-Claude Trichet, who is the former ECB president. You do not want to miss that.